Today with us, we have Tushar Kansal.
And then, when you are losing your savings of salary, which is the most precious money you have, then your family becomes very jittery.
That's true.
What are you doing?
Right. So, can you just elaborate what does Consultancy Ventures does?
So we do primarily 5 things. One is we arrange venture capital from our network. So I am a venture advisor with a Canadian fund. So we have helped them invest in many companies.
Can you simplify it so that our common audience also will understand what qualifies them for an IPO? Yes, what are the 3 things that they can they should have minimum to approach anyone like you?
So once a company is profitable, and a minimum net profit in audited financials of minimum 4 to 5 crores.
Final advice from you with your such a big diversified knowledge that you have. What things should a person have to achieve a success? Or
be positive.
Okay.
Even if you don't succeed once, second time, third time, and success is everywhere. It is, you can do in a job, you can do in a business, you can do in a social work, you can do in a creative career. So just be happy doing what you are doing, maintain a good health, maintain a good mental health also.
Okay. That's very important, I can say.
And this life will just go away in a jiffy.
Welcome to another chapter of Built on Brains. Today with us, we have Tushar Kansal, who is a very busy man, who has given over 1,000 talks. He has also spoken on TEDx. He is a founder and CEO at Capital Ventures, Consultancy Ventures. So he is also founder and CEO at Consultancy Ventures. He helps MSMEs, SMEs in IPO. He has advised over 400 plus SMEs, 400 plus startups across the globe, and he has helped in raising 2 billion plus funds. Thank you, Tushar, on this podcast, and thank you for giving your time from your busy schedule, and I hope everyone will learn a lot of things from you today.
Thank you for having me. It's a pleasure to be on your podcast. Yeah. Thank you.
And he has spoken on various topics, so I will be asking multiple questions to him, not only with respect to venture capitalism or IPO, but a lot of other questions we'll discuss today. So I would just like to know about who Tushar is, how you have come to this level today. So something about you.
Thank you for having me once again. I started in 2001 when I completed my MBA after my engineering, and then I did some entrepreneurship wherein I launched a education business, which did very well. And in 2006, I got offers from Narayana Institute, who had grown quite big at that time in IIT coaching, and so I sold it off. And me and my wife, we both belong to finance sector, and my wife was doing a job at that time, and she counseled me that for some years you do a job.
Okay.
You learn finance because practical side of finance. And I was very lucky. I got through Deloitte and Tush, and so my corporate journey started for 8 years, wherein I worked for Deloitte. Then I worked for Times of India's venture arm called Brand Capital.
Okay.
And then I was in treasuries of Aircel and MTS. And for MTS, I was handling debt. They were Russian company, very prestigious in Russia, but not getting debt in India because of losses. And so I arranged $2.5 billion of debt for them in 3 years. And then I was chief financial officer of a company called Distribution Logistics, which was owned by the American private equity fund Guggenheim Partners. So after I was in that position, I always wanted to do entrepreneurship only. And my experience in corporates and earlier entrepreneurship taught me that investing is a great business.
Okay.
Because the monetary system globally is such that valuations always keep on rising.
Okay.
As a general rule, that asset prices keep on rising. Valuations over the long term keeps on rising.
Right.
So that is why I started Consultancy Ventures in 2016, and it has been an amazing journey because I was, at that time, Startup India had started. So there were only 400 startups registered with Startup India, and nobody had heard of SME IPO, and things were very nascent in India on many ways, in many ways. So we helped that sector to grow.
Okay.
And along with it, we arranged venture capital funding for a number of startups. I provided mentoring to hundreds of startup founders. I've done more than 1,000 podcast talks, events, and 51 shows for Venture Capital TV, 9 episodes of Business Ki Pathshala for Hargar Startup Channel. And so the journey has been, like, over the last 10 years, truly exciting. And I have contributed in my best way possible.
It's phenomenal that we see everywhere. We see you everywhere, actually. You are on TEDx, YouTube, and many podcast channels as well. So that's really great about you. I would like to ask you one question. Is many people, I can say, who are trying to switch from job to entrepreneurship, they lag a lot. There are many lags that they face. First is they are more scared about their finances. So was it easy for you to make a switch from a job to an entrepreneurship?
It's a very beautiful question, and one should address the core of this question. See, I had done entrepreneurship before, so I knew that you have to put money, invest money, and then have a good plan, then keep on working towards your goal, and the returns will start coming in if your intention is good. You have made a good business plan, you are executing it well, and the market supports you, God supports you, so you will make money. A lot of people who do job, they become a part of a system in which their understanding of how this whole thing is functioning is not there.
Right.
Like, you are working in a marketing department, you are working in a finance department, you're working in HR. You just know how the HR in this company works. You just know how these products are marketed in this company. Probably you have some colleagues from other companies who have done marketing in different ways. So you have that exposure. But today, if you were to take 10 people from such company and ask them, how did your company work? 9 of them will not know anything about it.
Right.
They live in silos. The second thing is, when the check hits at the end of the month, that comfort of the check hitting you at end of the month, it automatically becomes a need in you, that you need that check to hit at end of the month. And you are not bothered that how much is the amount. By human nature, we know it is meeting our living expenses. My kids are studying, my house is running, my show is running. That sets you up for a lot of loss in how to deal with risk. Because entrepreneurship means all the time you have to take risk. And you have to be very cynical, because you are all the time thinking that you have to bother about profit. You have to bother about returns. So an entrepreneur is a very lonely guy. He's sitting on the top. He can't open up with his team in a way he can do with friends. And yet, anybody can just put in the resignation and leave anytime as if they never bothered.
True.
Whereas, the impact of that goes to that guy. So although he has a hand of giving, so he's providing all the time. But, entrepreneurs by nature happen to become very cynical, very lonely. They don't show their true stress in offices. And they try to deal with situations by using a lot of management theories. End of the day, it is people management. So, and people are tricky. Like, you saw that Meta gave $100 million offers to people from OpenAI. And many of them refused. They said that, we are capable to create another OpenAI. So, why should we accept salary terms for these 5 to 10 years? So, cynicism, is there all around. And, I would rather even say that many founders become emotionally scarred as the longer they do entrepreneurship. That is why having a stable family, having kids, that is your backup. That is where you go in the evening. And but then most of the intelligent people you see in the world, they are quite zany, as in they are not normal people who conform to rules and regulations of life. They always disrupt. They always try to find a new way, a better way.
Challenge the norms.
Yeah, and hence their personal lives also get impacted. Like you look at Elon Musk. He has achieved so much. I think, but personally, like he has so many kids, so many marriages, so many so one has to, entrepreneurship requires a lot. You have to know every field. Like you should know how your manufacturing is working, how your supply chain is working. You should know how your marketing team is supposed to work. You should know the names of the top guys in each department. You should know what is happening in their life. Because if you are expecting them to treat your company as a family, then you also have to treat them as a family. Which means somebody dies in their house, you have to go. Some party is there, you have to send somebody. So all that takes time.
Right.
So being an entrepreneurship is not easy. It is it has become very popular because you see Shark Tank, and then you see these people, oh my God, Oyo founder made billions and now he's coming out with an IPO and he's on Shark Tank, and it looks very, very attractive. But what these people go through, especially till the time they are trying to make it big, is like I've dealt with many founders. So I always tell them that take it easy, focus on your health as well, focus on your mental health, do some meditation, withdraw and switch off your mobile, go for a walk in the park, spend some time in nature. So these things
it's such a challenging thing, I can say. So getting out of the comfort
things
zone
have become very unpredictable. Like today, new technology comes in, suddenly your technology is supposed to be out of the market.
Right.
And technology changes after every 3 to 6 months.
And it's challenging world actually.
Like I remember this guy used to be in my college, and his father had set up India's largest video cassette manufacturing plant in Himachal. And one day, it went away and the CDs came in.
Right.
His whole plant. I mean, so things like that happen.
And it's challenging, and everyone may not be suited for that particular journey, I can say. Sometimes, yes, but it requires a lot of things if you're planning to switch a job.
But it's not written anywhere that you have to do entrepreneurship. See, you can do a job and still become rich.
Right.
Like I have friends who were earlier in Reliance Sports, head of India. Then he shifted and took charge of a Japanese brand in Singapore. He's sitting on savings of 50 crores.
Okay.
So you can, there are many ways. Even you can join a startup, take ESOPs.
Right.
Yeah, but again, challenges are there. Whether more funding rounds will happen in that startup.
True.
Whether they will honor the ESOPs exits.
Right.
Whether the IPO will come. At what value they allotted you ESOP. Then vesting happens at the end of the year. So you have to keep on working at it. So challenges are there everywhere.
And success rate is 3%. Still, am I correct?
Yeah.
Because that is what we
success rate
hear.
Is less. Yes. Right. But one of my known persons made 6 crores in a ESOP.
Achha, okay.
So that story, and I thought, okay, so she was very happy.
Achha, great.
So things happen like.
Okay. So anything that didn't went well in your professional journey that you want to share?
Many things. Yeah. I kept on facing down things. I faced many losses. Like when I left my CFO position, I started a company into hair products. So, but I don't know what I was thinking. I was thinking it's a consumer product. It's going to become big in India. But I had no idea about product creation, product marketing, product management.
Okay.
So I had no idea. So I lost good money in that. And then, when you are losing your savings of salary, which is the most precious money you have, then your family becomes very jittery.
That's true.
That, what are you doing?
Right. And sometimes family force you to do job.
Yeah.
Sometimes.
Yes,
I've
many
seen that.
times,
Yeah.
many times.
Right. Yeah.
See, what are you doing? Do a job. It happens, yeah. So, this guy said once that um, I saw a quote that the first 100 people who will doubt you when you launch a new thing will be your family and friends. And the first 100 people who will support you will be unknown people.
True that. I agree with you. Totally, I agree with you because this has been my journey as well.
Yeah.
Just to give you an example, my mom said when I left my job, कि अभी क्या घर पे आके बैठेगा कि आप बीवी को लेके should I support your wife and you also now?
Yeah.
That was the
Especially in
comment.
India, I think our education system does not, like in school, you never learn about entrepreneurship. You never learn about personal finance.
Right.
You never learn how to manage teams. You think that the creative young students won't be able to learn how to manage people. They won't be able to learn personal finance. They won't be able to learn stock markets, investing. They will be. But still we are teaching physics, chemistry, maths as if everybody will become scientists.
Finance is not there in our syllabus, I guess. Correct? We don't know finance.
So it's the same Macaulay system of education where you make everybody clerks.
Clerks.
Do a job.
System, I guess.
Don't take risk. Emigrate to Japan, Canada, Australia, UK. Do a job.
Right. Financial education is lacking in our education system, and that's where things become different, I can say.
Yeah.
So, can you just elaborate what does Consultancy Ventures does?
So we do primarily 5 things. One is we arrange venture capital from our network. So I am a venture advisor with a Canadian fund. So we have helped them invest in many companies. I'm also a venture partner with a fund who's owned by NRIs, non-resident Indians. So they invest between 12 to 15 crores per company.
Great. Okay.
So work very closely with them.
Okay.
Secondly, we do SME IPOs. So my partner in my company is on the board of directors of Rajasthan Global. Rajasthan Global is the largest anchor investor in SME IPO space. They have invested in 130 IPOs.
Great. Okay.
And very well known in the market. So 80% of the deals which happen in the market in SME IPOs, they come to them.
Okay.
Because once they get associated with the company, then a lot of other investors also come. That then I do debt as well. So a lot of these startups and SMEs, they don't have collateral to give to the bank. Like they don't have real estate.
Correct.
So, and they always feel that why are they diluting so much equity? They can take debt.
Right.
So I arrange large amount of debt for them through my fintech partners and my NBFC partners. Fourth, I do a lot of talks, podcasts, events out of sheer giving it back.
Passion.
Which I love simplifying life, simplifying industry with meaningful talks.
Right.
And I'm very, I have a lot of gratitude that you called me and people call me, and I really love giving it back this way. And then I do a lot of mentoring of startups, wherein I was on the board of a company called GP Eco Solutions. So they wanted to come out with an IPO. So I knew them since almost 15 years. So they took me on the board of directors, and a $4 million IPO got bids of $2 billion. Like amazing. 31 crore got 16,600 crores. So, like, we played a role, my company played a role in that, we have a goodwill in the market.
Right.
And so, we aim to someday become a VC fund.
Great.
But, early steps.
That's great. So, for SMEs, actually, many SMEs don't look for IPOs generally. They have their own system of working, and very less companies aspire for an IPO. Or I can say there is lack of knowledge, I can say. So, can you just throw some light on, can SMEs, every SME, can opt for IPO or not? That's first question on this.
No, it's a misnomer that most of the SMEs can come with an IPO. Because, see, in IPO, there are institutional investors like anchor investor and FIIs and mutual funds and institutional. Then there are retail investors.
Okay.
So there are two types of money which the system, the regulatory system is always bothered about. That, this money should not get stolen. One is retail investors' money. One is the taxpayers' money. So there are a lot of laws always in every country, taxpayer money and retail investor money. So SEBI, which is Securities and Exchange Board of India, they have very strict guidelines as to who can come out with an SME IPO. For example, should have a minimum tangible net worth of 3 crores. And after the issue, the post-issue paid-up capital should not be more than 25 crores. For the last 3 years, at least 2 years, they should have a profit. And in BSC's case, a profit of minimum 1 crore.
So these are the minimum criteria.
These are the minimum. There are rules. But with SEBI, there are two types of rules. One is what you can read on the website. The other is hidden rule. So although you will think, no, I have a profit of 5 crore, so I can come out with SME IPO. Then some SEBI guy will throw your file out saying that minimum 10 crores. So, they have some hidden rules because they don't want bad quality issues to come in the market and later on spoil the name of the SME IPO sector, which has come up after so much of difficulty. Like this exchange was there since a long time, but there used to be very shallow IPOs. Like, you come out with an IPO, your friends put in the money and you declare that we have raised money and then, somehow you give the money back to you. But now genuine IPOs come in SME IPO. So it has become a mature sector and a lot of the investors who used to put in money in the main board IPO are now putting here. So to give you an number, 240 issues, SME IPO issues had come in 2024, raising approximately 8,700 crores. Now the thing is, why every SME should look at this option? Because traditionally, how they get funding? Traditionally, it is loan from directors, loan from the founders. And generally, founders always feel my whole money is stuck in the business.
Always.
So they feel very on the edge all the time. Or they have to go to banks. And, in the case of banks, after the government had a bad experience with a number of founders, they took huge loans and like Mr. Vijay Mallya, he ran away from India. So the laws in India, in case you have used the bank's money for taking undue risk, which is legally not allowed. So you take loan and then you put it as equity in a subsidiary company. Now that is not allowed. The loan is for the working of the main company. But a lot of founders do this. They keep on playing around with money. You take it out through a subsidiary, then you put it back, and those things are there. So there are very legal implications in case you are not paying your debt back. And the founder can lose the company because if they are not paying back the loan, any lender can send them to NCLT, National Company Law Tribunal, file a bankruptcy. And once the bankruptcy is accepted, the founder is taken out of the company and a resolution professional is appointed. So the company goes from the founder's hands.
This is after IPO?
This is this is
before IPO.
Before IPO.
Generally
in case of debt.
In
case of debt. Like debt, or you are not paying any vendor. Vendor has good papers to support that his money is not paid. You can file a bankruptcy case in NCLT under the IBC. So once that is accepted by the court, NCLT court, then the founder can lose the company. But secondly, if you are taking money from venture capital, now first of all, venture capital gives money to only 2-3% type of companies, very scalable, unique technology, and those kind of things. So a steel plant or a tire unit or a normal IT company will not get venture capital. So where does the founder go? So their options are so limited for a founder. So end of the day, then now that SME IPO has come up, 240 companies raised money last year successfully, and that money, the investor in SME IPO does not take a seat on the board of directors. Like VC takes mostly a seat on the board of directors. The VC has very strict clauses.
Right.
Provided the VC is available. First of all, it is not even available for most companies.
True. Because they are traditional companies.
Because they are traditional companies.
Right. They are dependent on vendors.
Yeah, because the VC has borrowed money from investors, promising them high returns. So, end of the day, he has to make a return on those. But you know, what happens is in the case of SME IPO, once the anchor investors come in and some institutional money is also there, then you just have to sell some retail quota. So which sells because the market is very hot. So the subscription comes like 1 lakh per person retail quota. So the IPO happens and then the shares go to the retail investors' hands. And if the company is doing well and created a good buzz in the market, past financials are also good, then you know the possibilities are endless. Like you know Oriana Power issue, I think it came in I think 100 rupees. It went to 3,500.
Great.
And you know they raised 50 crore by IPO. They plowed it back into business, and from that, their net profit was 50 crores.
Oh my God.
So the share, so you know now they are doing a follow-on public offer just by diluting 2 or 3%. They are raising hundreds of crores. Because you have shown performance.
Right.
Retail investor is crazy after you. So that is the beauty of. It can work reverse also.
Risk is also there.
Risk is also there. You do some hanky-panky and do some illegal thing. You have to report everything on the stock exchange. And people see it. Oh my God. So
trust goes.
Yeah.
So you had spoken on many issues like ethical issues are there, using funds for other purposes apart from company. So you have worked with not only Indian but foreign companies also. Is there any difference that you see when you work with Indian companies holistically? Not every company may be specific, but in a large perspective, any large perspective you have on these two differences?
Well, my general experience is that foreign companies are generally law-abiding. And because you know the rule of law works in their country, so they like to document everything, have a legal agreement, a watertight legal agreement on everything. They'll have co-founders agreement, they'll have vendors agreement, and you know in India our judicial system it does not give confidence to people whose money has been stolen. So you know the police system, the judicial system. So you know. Like in China, you are scared of the government. You know the government can do anything.
Right.
And in Dubai, you can't criticize Dubai. Like people are saying no. In Singapore, you can't write against Singapore. Just like that. Like you know, there is a sense of you know that no, we are doing wrong. Then something wrong might happen to us. In India, you know, the moment a person lands from Dubai to India, he suddenly becomes a new person. He's not scared of anybody. He's like a lion, you know, like he'll throw things here and there. He'll, you know, shout and talk. And so in the business sense, definitely there is a problem in Indian, the way business is done here. Like, you know, payments come very late. All the SMEs, they have working capital issues.
Correct.
Instead of 30 days, 45 days, some people pay in 3 months, 2 months. And secondly, you have to take out money, your own money, which the customer is supposed to give you. Like, you know, you won't believe there is a guy who I know since many years. He had a fantastic infrastructure business. But, you know, he was always upset that I have to spend so much of time in getting my payments out. So he sold that business and he launched an online education business in which the payments come through payment gateway. It comes through gateway. I don't have to talk to anybody for my. The main reason for doing that business was payment gateway. And he made crores in that. One day I was doing a walk with him and his mobile was ringing. It was buzzing. I said, what is this? He said, payments are coming.
Great.
So
Great.
in India, that is, I think, rule of law. Nobody is scared beyond a point. Like, and you have to maintain good relationships to take out money. And I can't say it's a general character issue. Like, you can't. I have seen all kinds of people. Like somebody who does business for 1 year will realize that end of the day, one has to be ethical. Because there are relationships both ways, customer side also, back side also, employee side also, investor side also. So end of the day, your name travels.
Correct.
So, but end of the day, the legal side of it is lacking, which is what I feel.
So when we say, as we are growing financially, India has become fourth large economy. But when we compare ourselves with the technology that other countries are developing, specifically into tech domain, so still in India, many startups are fintech, service providers, aggregators. Still there is less focus on innovation or tech innovation. So what would be the reason, as per your experience, why this is happening in India and why people are not ready to invest on tech?
The biggest reason is that we are English speaking people. So we have foreign products all the time available to us, which are backed by dollar money. Some US company, WhatsApp is there, born in US, funded in US, got sold for 21 billion in the US. It's our biggest product which we are using. So today, a guy from IIT saying, sir, I want to compete with WhatsApp. So 99.99% people will tell him, don't even try.
True.
Because you don't know what you are dealing with. You're dealing with a US corporation which is backed by unlimited money.
Correct.
The parent Meta is $3 trillion big, like more than the size of countries.
Right.
So that is the biggest reason, and that is why out of 185,000 startups registered with Startup India today, only approximately 3,800 are technology startups, deep tech.
Okay.
And out of that, because there is even 2 days back, Catamaran Ventures, which is the family office of Mr. Narayan Murthy, they are on record to say that the late stage funding is not available so easily in India. So the fund cycle, a fund is there for 10 years. So after that they have to sell the investments and close as per the laws. But if they are not able to sell the investments because the late stage funding is not that much easily available, then they give a discount. So Catamaran has said, Mr. Narayan Murthy's family office, that then so the companies, they become available to you at a discount. So the founder loses out because he opened a deep tech company. He's not getting follow-on rounds, whereas he's competing with American products. So that is why, if you look at the genuine large deep tech companies in India, there are handful, like 50.
True.
Probably 50 throughout India.
Correct.
But in China, it is not the same. They were very conscious that our citizens' data should not be in the hands of foreigners. Our citizens should not be governed by foreign algorithms. Like, little bit politically sensitive thing, but like, Mr. Trump is kind of saying that he stopped the India-Pakistan war. Now, Indian government is clarifying again and again that no, we stopped the war after Pakistan requested us to stop the war. But they are not going anywhere because all the platforms are owned by America. So they scrub all the information, So that is why, I think Indian technology, and it is, even more imperative for Indian technology companies to be very conscious about safeguarding the technology which they are creating.
Right.
After so much of effort and against so much odds. And, making it like customizable, like share chat. Everybody used to talk about Facebook Messenger, WhatsApp, and they came out with, ShareChat came out with a chat in vernacular languages of India, local languages.
Okay.
And they have 20 crore subscribers.
Great. Great. Okay.
So they against all odds.
Okay.
And every day Googles of the world and they want to buy it out
Okay. Okay.
because they have unlimited money.
True.
Like they can buy anything.
Right.
So that is a unique situation of India.
Okay. And any thoughts for an entrepreneurs to come out of this problems specifically that are common to all? Anything that they can improvise on themselves, that these problems are still there and still we need to move ahead? What would be that?
Be very smart about it. Like you take the money which is available. Don't lose control.
Okay.
And then you are the right person to talk about it. But intellectual property has to be filed in proper format with a proper style in time.
Right.
And in case you can monetize the IP, then you should do it. Like Singapore, a friend of mine has a deep tech company there. He's able to collateralize the IP with the Singapore government, take funding without losing any equity.
That's great. Okay.
They take IP as collateral and they give you money.
That is not in India as if now.
It's not in India. Singapore is number one in that sense.
Correct. Yes. Singapore is there. US is also there.
Yeah.
They take it as an.
China is there. It's a large economy, but then they put conditions that you shift to China.
Right.
They just lock, stock, and barrel.
Right.
Move everything to China. This happened with a IIT friend of, not friend, he's a client only. He had created a unique robo, which creates furniture. And using AI. So the robo has to be trained. That is how robos work. Like AI has to be trained.
Correct.
So he kept on training for years these 3 IITians, and then he was not getting follow-on funding because in India the hardware system is not very confidence giving because we import a lot from China. So we are competing with China in hardware.
Right.
So it's not easy to compete with them. They are $26 trillion economy.
Correct.
So then he got some Chinese investors. They said you move all your IP to China.
Oh, okay.
So they didn't move.
Okay.
So but still these things happen.
Okay, that's great. So when an SME is considering for IPO, does this IP, whether it is a patent or trademark or designs, does that change something, benefit in some way or the other?
See, look at it from the investor's perspective. He wants a growing company because the share price depends on the growth of the company has shown in financial terms.
Right.
He wants good cash flows of the company, healthy cash flows. So he knows that my money is safe. Today I have this share and tomorrow also this share will
Keep on rising.
And there will be a lot of investors after this share.
Right.
So every investor who puts in money early in a company is taking more risk.
True.
Because there is no liquidity in the shares of the company.
Even valuation is less.
And
they cannot dilute also that stage.
But he's taking the most risk.
Correct.
I'll give you an example. There is a company, Enviro, in which Rajasthan Global has taken shares. Now the total outstanding shares of that company is around 54 lakhs.
Okay.
Now out of 54 lakhs, a huge chunk is sitting with Rajasthan Global.
Okay.
So how to sell that? Because those kind of shares are not getting traded in the market. Less volume is getting traded. So end of the day, tomorrow, hell breaks loose. Like 2008 Lehman Brothers crisis. Stock markets plunge by 15,000. What to do with the 30 lakh shares he is holding? He was happy that he held those shares and some 50 rupees and now the share is 300 rupees. He was happy, but he could not sell it. So he takes the most risk.
Right.
Risk and return. He takes the most risk, he makes the most return. But IP comes in very, very important. That IP gives you predictability of your cash flows. That this 5-year projections which the company is giving me, there is a surety that this money will come in.
Right.
Because the IP is backing it. And then the IP can be put as collateral also. Like VC funds also take IP as collateral.
Okay.
There are many VC funds for whom IP is their fallback option.
Okay.
Like, if they are not able to get an exit, they say that in the agreements, they protect them through the IP. That, then we'll have a right to monetize this IP.
Okay.
So
Okay.
those kind of things are also there.
Okay.
So for an investor in a SME IPO space, IP is very, very critical.
Okay.
And nowadays companies are waking up to IP,
Right.
and they are filing IP and ensuring that they leave something for the next generation as well in the form of this kind of asset,
Right.
which it's not only real estate, it's not only it's your
Intangible, in short.
it's your capital,
Right. Right.
which is protected with what you have created.
Right. 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 So that's great. So IP also will change the perspective of investors, and maybe it can be valued at a higher price, maybe.
Yeah,
Right?
yeah, definitely. It adds the valuation.
Okay.
Like uh, Ola Electric, it opened the largest electric scooter manufacturing plant in Chennai, which was the largest in the world, and that's why people backed them with huge money. But everybody was thinking that the day a Chinese company or a US company comes into India, so immediately everything will fall off.
All of right. Right.
But the surety comes from the fact that the company has patented
Correct.
the technology,
Right. Right.
and hence not only they will continue selling in India, they might sell in Africa tomorrow. They might, because you can file in many
Right. Right.
countries.
Right. Right.
So that kind of surety, I think even the governments can't give that surety,
True. True.
which
True.
IP can give.
Right. 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 If they have patents, they have a 100% monopoly. At least for 20 years, they can.
And they are legally enforceable across countries.
Right. Right. Right.
Like so, and the possibilities are endless.
Right. Right. So you spoke on SME IPO, but I think so. Can you simplify it so that our common audience also will understand what qualifies them for an IPO and what not? And if yes, what are the three things that they can they should have minimum to approach anyone like you?
Sure. See, when a company is opened, then the investment goes in.
Correct. Correct.
But customers will take time to come. So some losses are there.
Right. Right.
Surely, slowly, the losses become profits.
Right.
So the cash flow starts coming in.
Right. Right.
Slowly, the company becomes profitable.
Profitable. Right. Right.
So once a company is profitable, and a minimum net profit in audited financials of minimum 4 to 5 crores,
4 to 5.
then they can say that, okay, we have been in the business since more than 3 years. We have net profits in 2 out of the 3 years.
Okay.
Our minimum profit is 4 to 5 crores. Now we can list into a SME exchange.
Okay. Okay. Okay.
That is because
Bare minimum.
although loss-making companies have also got listed. Zomato got listed. Paytm got listed.
Right. Right.
But those were larger issues which were backed by FIIs, foreign institutional investors, backed by mutual funds. But for SME IPO, those were main board issues. For SME IPO, profit is very important. Very, very important. And in fact, the valuation of the company also happens basis the net profit of the company.
Okay.
Or a multiple of net profit. Like, our company Rajasthan Global, they will typically give you 10 to 12 times of net profit as the valuation.
Okay. Okay.
So suppose a company has 5 crore net profit. They will say your value is 50 crores. And 30% of that company shares will get listed.
Okay.
So by diluting 30%, the company will raise 15 crores.
Okay.
Out of 15 crores, some money will go for the fees of the merchant banker. And that money usually is quite a lot, like 12 to 30%, 20%,
Okay. Okay.
quite a lot. Because they have underwriting fees also. So, so those kind of things are there. And the company should be growing. It should not be that you are taking IPO money and then paying back the loans of the founders.
Okay.
There is a limit to that. General corporate expenses has a limit. How you can generally use it. You have to be very specific. You want to use that money for growing the company. The
Only
investor will give that money for growing the company, so that the shares rise in the future. That's the whole game about.
Okay. So these
And
are basic.
SEBI is also very particular.
SEBIs. Okay.
Yeah.
So this is for Indian companies who want to opt for IPO. So what is the difference in India and China when it comes to SME IPOs?
No, when it comes to IPOs, once the Chinese meritocracy, the bureaucracy which runs on merit, once they identify a company, they give it complete backing. Whether it is funding, whether it is intellectual property, whether they need land, whether they need anything, they will get it listed also. They give complete support to the extent that all the bureaucrats sitting in the provinces, they are competing with each other in identifying such companies which are very promising, which are creating very unique thing which no company in the world is creating. So they will back it up. And
just
that
like
is what
BYD, I can say.
BYD, you know the size of the factory of BYD?
It's huge. It's
50
huge.
square miles.
50 square miles. Oh my God.
So,
I got goosebumps.
The whole city. I mean, so they have created a city, and the idea is always, Chinese idea is don't look after profits now. Focus on killing the companies of other countries. Once you kill them in their markets, then you can raise prices. Like you had Lava phones, Micromax phones in India. So till Oppo, Vivo were not directly available. Once they came in, they started killing Lava, they started killing Micromax because the production was in their hands.
Correct.
And now they raise prices. After they got the market, they raise prices. After they threw out all the... So that is their philosophy. And there are 14,000 little giants in China. 14,000 little giants. These companies get total government support. They want to become even bigger. In India, the SMEs want to stay small. So because they will lose benefits from the government. CGT SME scheme, like minimum turnover, right?
Correct.
So in China, it is the reverse. The government says become bigger, and they support it. So that is the basic difference between... and China has become too huge. They have endless money.
In simplified words, if I can understand, even if they are making losses, still the Chinese government is backing them and supporting financially. That's what a person like me can understand.
They have a strategy that you support your companies so that these companies can compete with the established companies in other countries. Even if it means that you are supporting losses.
Great.
By providing them stock market support, investment support. Even the municipal corporations can invest and take equity in any company.
Oh my God.
Yeah, there's a company in your district, in your province, and this company is very promising. One day, its product can compete with the global companies. They will take 30% and give them millions of dollars.
That's amazing.
So that is the kind of freedom they have given to their bureaucrats. Because it runs on merit. There is nothing apart from merit.
Great.
That is the basic difference.
And that's a huge difference, I can say. That is the
reason. It's a huge difference. Why?
Where they
Why
are. Why
in 30 years China became from 2 trillion to 26 trillion?
Right.
And India has become in 11 years from 2 to 4.2 trillion.
Right. It's a huge
the whole
difference.
Frame of the bureaucracy.
Right.
It is in India. It is not geared for infrastructure, for creating companies.
Right.
That is the main difference.
When coming back to India, I can say, as we were ruled by Britishers, they spoiled everything over here, including our culture, knowledge as well. And the mentality has also been gone. We are always thinking like we are inferior to everyone. The pride has gone. And one more thing, I think so. It's a boon or curse, I don't know, because I was just thinking over and over on it. Democracy. It has not worked well in India, I can say. What is your thought? Do you want to take it? Leave it?
No, I want to take it. See, India was so unfortunate that we had Britishers sitting on the top of us. Imagine they came into a country which was 30% of world GDP.
Correct.
They left it in 1947 at 5% of world GDP, followed by Nehruji, Indiraji socialism, 2% of world GDP. So we missed the whole industrial revolution. When the mills were buzzing in Manchester, here people were losing jobs in the handlooms. Nobody brought those machines to India. It is only when people started studying in UK becoming barristers, law.
Right.
Then some people got exposure that we need to bring this machine. Birlas, Tatas,
Right.
they brought the first manufacturing units here.
Correct.
But that was not enough. Like the way Japan industrialized with Meiji Restoration, like the way Peter the Great industrialized Russia, like the way Bismarck industrialized Germany. So they brought modernity to their systems. Nobody did that in India. That is why our whole frame of the, like, people are not conversant with technology in the family. Like, does it happen that somebody in your family goes to the backyard of the house, creates a rocket and shoots it?
No. Rarely.
Yeah, that
Rarely happens.
technology never came inside the system, which earlier used to be when we had 30% of world GDP. We were a different people. We were builders.
Correct.
We used to create grand temples, grand roads,
Traders.
dams.
Right.
We were traders.
Right.
Our silk roads were functioning.
Right.
People used to go from here to Jaisalmer, then crossing into Punjab, then going to Afghanistan, Iran, then going to Tajikistan, Xinjiang.
Right.
Now the whole roads are blocked. We can't go to Pakistan.
Right.
All the routes are blocked. We have to fly.
Right.
How many people can fly?
Right.
Tibet is blocked.
Right.
China has blocked Tibet.
Correct.
You can't take a train from Delhi, go to Lipu Lake Pass, cross into Mansarovar, then link it to Lhasa, then travel to Beijing in that train.
Right.
From this side, northeast side, you can't take a train, go to Myanmar, then go to South China,
Sure.
or can't go to Thailand.
Right.
Even Sri Lanka does not allow a road and railway bridge. 42 kilometers distance.
Yes.
Even they don't allow.
What is the reason for that?
We are living in history. This whole region is living in history. We're living in the baggage of history, of partition, of 1959. China took over Tibet. The boundary never got settled. We are living in history. All those historical issues.
Right.
And so I think wounded civilization, as Mr. V.S. Naipaul said. We are a wounded civilization. So that some things are getting solved, but I'm very hopeful that we'll come out of it.
So which company should approach Consultancy Ventures? At what stage and at what stage?
For venture capital, your minimum revenue should be 1 crore. For SME IPO, your minimum net profit should be 4 to 5 crores. For mentoring, if you are willing to spend something and get quality time, then I can give quality time. For companies who need good people to build their board of directors before SME IPO, I can look at that. And otherwise, for mentoring, like I have my TopMate account and Expert Bells account. Like I'm open to give my knowledge, share my knowledge with anyone who would like to.
So you'll get his LinkedIn profile in the description. So if you need any kind of support, you can just contact him on LinkedIn. And apart from that, and then from there onwards, you can take it forward, I guess. So I will also give the link of his company where you'll get all his details. So final advice from you with your such a big diversified knowledge that you have. What things should a person have to achieve a success or bring success to his life?
I will say that all the forces, economic forces, political forces, geopolitical forces, they are aligned in such a way that it is easier today to build a business, to build an organization, or even if not a business or organization, even like a social organization, like to create something. Like today you have internet, today you have easy digital marketing, today you have Instagram, today you have YouTube, today you have trained people who you can take on a salary for very less amount. So today you have fancy offices available, co-working spaces available with Wi-Fi, you have funding options available, accelerators, incubators, angel investors. So today the forces are conspiring to give success to you.
Right, everything is there, just you need to work.
Be positive.
Okay.
Even if you don't succeed once, second time, third time, and success is everywhere. It is, you can do in a job, you can do in a business, you can do in a social work, you can do in a creative career. So just be happy doing what you are doing, maintain a good health, maintain a good mental health also.
Okay.
and,
That's very
and,
important, I can say.
and this life will just go away in a jiffy. Like, it runs so fast. So enjoy your days, live one day at a time, and be happy.
That's great. So wonderful advice from you, I can say. So,
Thank you
many
so
things
much.
I learned from this podcast.
Thank you so
And
much.
hopefully, as we mentioned, we will do one more podcast if you're
Sure.
interested. So I hope you have also learned a lot of things, and he can definitely help you if you're aspiring for an IPO or advice or any consultancy that you need. So keep investing, keep learning, and keep earning tremendously. All the best. Thank you. Thank you very much.